just want to say, Warren and Charlie, thank you again for hosting us all. This is a great event.
Thank you.
My question is about the recent decision to sell shares back of Phillips 66. Not to put you on the hot seat, but right after that, share prices jumped up about $22 a share. You mentioned at the time that there's some regulatory requirements if you own over 10% of a company. Could you talk about the factors that go into how you decide whether to retain more than that or get under that threshold? And then what are your thoughts long-term on Phillips 66, like their business, midstream refining?
Yeah. Well, it was the city service preferred of last year. We sold the stock at around 93 or 4 and probably 115 now. But we own just under 10% of the company. And the more Ted and I think about various problems connected with regulatory problems and trading problems and so on, overwhelmingly, we'll stick below 10% on marketable security holdings. We've done it with the airlines. Now, that does not mean we're going to reduce our holdings in American Express or anything of the sort. And Greg Garland has done a great job at Phillips 66. We've had very good relations with the company. He's a very, very, very experienced and sensible manager, but I did decide that I wanted to be below 10% in that holding, and like I say, we'll stay just slightly under 10% of Wells Fargo. We've actually sold a few shares just to stay below 10%. In the case, I think, of both American Airlines and United Continental, we unless there's something unusual, we're going to stay under 10. But we have 9 and a significant fraction percent of Phillips, and I think they've been good at operations. I think they've been good at capital allocation. We traded them stock for a business some years ago, which has been a very nice business that we've retained an operation. So we've got a lot of money still in Phillips, and I wish I'd made the deal at a higher price, but we made money on what we sold, and we accomplished an objective. But Charlie?
Well, we like the subsidiary we traded the stock for.
I missed that, but
we traded the stock for a subsidiary.
Yeah. Well,
we like the subsidiary.
Oh, yeah. Well, it improved.
It's like the stock went away for nothing.
Yeah. Actually, we've done pretty well with Phillips. Becky?
This question comes from Vlad Koptev in Ukraine. He says, capitalization of cryptocurrencies approached that of Berkshire and Apple last year. And clearly, the idea behind crypto will affect conventional banking groups where Berkshire is a shareholder. You always say you didn't go into too much detail to obtain an understanding on cryptocurrencies. So what factors caused you to say that it's a bubble?
Well, generally non-productive assets remain, if you had bought gold at the time of Christ and you figure the compound rate on it, it's maybe a couple tenths of 1%. It essentially is not going to deliver anything other than supposed scarcity, because you can only mine so many. But so what? I mean, what does it produce itself? The check is a wonderful idea. Just imagine how the world would be without being able to write checks or have wire transfer of funds. But it doesn't make the check intrinsically itself worth a lot of money. And if you said you can't use something called check with a little piece of paper, you'd do something else to transfer money. I think that anytime you buy a non-productive asset, you are counting on somebody else later on to buy a non-productive asset because they think they can sell it to somebody for more money. And it's been tried with tulips, and it's been tried with various things over time, and it does come to a bad ending. I mean, you have a hard time. You can think of raw land. I mean, the Louisiana Purchase was, say, $15 million for 800,000 or so square miles of land. In fact, you're sitting on land that came with the Louisiana Purchase, and so what we paid $20 a square mile, and 640 acres in a square mile, and you're down to 3 cents or something. So that was a pretty good purchase of what was then a non-productive property. But it's very hard. You can buy stamps. Bill Gross got collected a wonderful stamp collection, and it sold for more money in the end. But it's dependent on somebody else wanting to buy, hoping they will sell it for more money, and so on. And in the end, you make your money out of productive assets. If you buy a farm, you try to estimate what the crops would amount per acre of soybeans or corn or whatever may be raised, and how much you have to pay the farmer that farms it for you, and what your taxes will be, and various things. And you make a conclusion based on what the asset itself will produce over time. And that's an investment. When you buy something because you're hoping tomorrow morning you're going to wake up, and the price will be higher, you need more people coming into it than are leaving. And you can get that, and it will feed on itself for a while, and sometimes for a long while, and sometimes to extraordinary numbers. But in the end, they come to bad endings, and cryptocurrencies will come to bad endings, and along with the fact that there's nothing being produced in the way of value from the asset, that you also have the problem that it draws in a lot of charlatans and that sort of thing who are trying to create various sorts of exchanges or whatever it may be. It's something where people who are of less than stellar character see an opportunity to clip people who are trying to get rich because their neighbor's getting rich buying this stuff that neither one of them understands. It will come to a bad ending. Charlie?
Well, I like cryptocurrencies a lot less than you do. And so, to me, it's just dementia. And I think the people who are professional traders that go into trading cryptocurrencies, it's just disgusting. It's like somebody else is trading turds and you decide I can't be left out.
To the extent that we're being webcast around the world, I hope some of our stuff